Hey, I know starting your own business is very, very exciting. I know it was for me. But at the same time, most businesses fail because they don't start out the right way. And it's very stressful trying to figure out all the red tape and the paperwork to fill out. Am I obeying by the laws? Am I getting my foundation strong? Well, today you don't have to worry because you got me, JI. So I'm going to show you how to get it done. Today, we're going to dive in and make sure you can navigate just how to get it started and get it up, the foundation period. At the end of this video, there's some golden nuggets that you're going to go, because I got to the end of it and went, I should have told them that first. So I want you to listen and follow along the whole time. So let's go ahead and get started. Okay, we're going to start off with the first one, your name. I know you're going, duh, that's easy to come up with. No, it's not as easy as you think. You need to find something that is unique and distinctive that separates you from the crowd. Yes, in that respects, you also have to find one that is available. What do I mean by available? You have to go to your local Secretary of State's website and you have to search for your name and see if anyone else already has claimed it for a corporation, for a structure. Because if they have, then you're going to have trouble using that exact same name. So you need to check that out as you're coming up with the names, as you're making adjustments, as you're making changes. You might have to mode it. So that's going to be the first financial investment that you have to make, and that's going to be to reserve your name. Different states have different fees for reserving your name. But this is something that I recommend, because if you don't and you skip this step and you go ahead to step number two, where I'm talking about incorporation, then you might find yourself not being able to incorporate the company name. Take the time out to pay the fee to reserve your name. Now, in the description of this video, I have links to resources that can reserve names for you, that they can help you with every step that I'm going to talk about today. If you don't want to try to do it yourself, or you don't have confidence in it, or you think that your time is better spent building a company rather than doing all the red tape, it's down here in the description are the links. Number two, can get complicated. So I don't want to make it too complicated. Basically, you need to incorporate your company. Why do you need to incorporate? It's because you want to put protection between you and the company. You have assets, the company has assets. And if you ever get sued and you have not set up incorporation and you're sole proprietorship, then that means your company can be sued as well. And vice versa. If your company gets sued, you could be sued personally. So to separate your liability of your assets, you want to incorporate and set up separate entity. Now, there are different types. I'm sure you guys have been hearing a lot about LLCs with all the real estate running around, and they kind of made this a cutesy type of form structure, but it's a lot more to it than people even know. And there are other forms of incorporation. I incorporated over 200 companies, not for myself personally, but for other people. So I know exactly what I'm talking about. So let's dive into the different styles and different types of structures and examine how it could be beneficial or not for you as a new startup. Number one is going to be the C Corp. You name all the big boys, the blue chippers, they're C corporations. And the reason why they're C corporation is because they have stocks, they have shareholders, they have dividends they have to pay. So there is a different taxation to it and flexibility to it. They can do things in all kind of facets. Now, the disadvantage as an individual like yourself who's starting a company or is not as big is that you get double taxation, triple taxation, as I see it, because you get taxed on the corporate level with the profits that you made, you get taxed with your payroll, you get taxed with dividends that are being paid out. So this is a little bit for a more mature and developed situation. So if you're starting out, if you got a small company, it's not necessary to have a C corporation. It's going to be more red tape, it's going to be more cost, and it's going to be more taxation. All right. So the second one is I'm going to do the LLC before I do the one that I like the most. The LLC is one that's popular right now, and everybody's jumping on the bandwagon doing the LLC, and that's great. It's great for when you're doing, to me, smaller things. And what I mean by that is when you're doing, maybe contracting work or you are doing some real estate, you don't have too many people involved in the ownership of the company. This can be a great idea to have a separate entity because the LLC has members. It doesn't have shareholders, and it has a managing member, and then it has other participating members. So it's a little bit different than traditional corporations, and the language is a little bit different. So you have to be careful with how you operate it, and it's very vital that you keep the separation, the veil of separation between you and the LLC, because it can easily be commingled in a sense, and you can get rid of that veil protection, and you can actually still be sued as one if you're not doing the correct things. What do I mean by that? Okay, I'm going to give you a little bonus here. Um, when you have a separate entity, a corporation, um, you cannot commingle your funds. So, in other words, you have to have a bank account for them and a bank account for yourself. You cannot commingle funds. And when the funds are being exchanged, I could do a whole video on how you're supposed to do the transactions, how you can benefit from them, and how you can actually suffer from them. So you just have to keep all your assets separate and not commingle them. If you commingle them in any way, then you can cause yourself to be considered one if you ever get sued. Okay, so let me jump on to the next, because I can go on for a long time with that, and I will do a video maybe in the future in reference to that, especially if you guys ask for it. So the one that I favor the most is the S corp, subchapter S corporation. The reason why I love this one is because it is single taxation. And what do I mean by that? Okay, so when you're subchapter S, when you pay taxes at the end of the year, your corporate tax profit is broken down in proportion to who the ownership is. So if I own 50% and we made $100,000 profit in the company, then 50,000 of that is considered my income. And I get to file on my regular income taxes with whatever other money I might have made if I had a job also to go along with the company. I pay for it as regular personal income tax. I don't pay it as a corporate tax. So I'm not taxed twice, I'm taxed once. And this is very attractive to people. Now, the only limitations that you have is that you cannot have any foreign investors. People have to be US citizens to be able to be shareholders. So you can't just divvy out to people in different parts of the country. And you're limited to the number of shareholders that you can actually have. So this is my favorite because you're still in your maybe your infancy, toddler stage, and you can be a little bit teen stage of your business and still be able to operate and move very well. Now, here's another bonus for you when it comes to dealing with the structure of your company. Your structure of your company also is going to determine the way you can raise funds. Again, I can do a whole video on this as well. If you want it, let me know in the comments. So, what I mean by that is if you're looking for investors to invest in your company in your LLC, here's the limitations. You're not giving out shares to them because there aren't shares to be given out in a LLC. It is percentages, it's membership, right? So you have different members. And the LLC is not what most people like to invest in as an outside investor. They like to invest into a C corp. A S corp, some will do, but most likely, if you're trying to go big, if you're really trying to be like with the startups you see in Silicon Valley and different ones, then you need to convert to a C corp in order to make sure that you can have stocks and you can have dividends and there can be a vested situation. So there's a lot of things that go with it, but in order to track investment money, you will probably most likely have to convert to a C corporation. A S corporation, you can be there for a while, long as it's very small, amount of investors and they agree to it. All right. So let me go ahead and skip on to the next part, which is very vital because it's part of how your company functions, how it operates, which also affects your investment potential into your company and also the legalities. Okay, the next one in this process of establishing your foundation, you can call it step two or step three, whatever you want to call it in this process. And it doesn't have to necessarily always go in this order, but you're going to obtain a EIN number, a federal ID number. This is an employee identification number. That's why it's called EIN. What is its purpose, right? Its true purpose is for you to be able to pay payroll tax. However, the EIN number has come to be something even more important to businesses, especially smaller businesses. It is actually the social security number of that entity. Just like you as an entity have a social security number, the company that you have will have its own, which is the EIN number, the federal ID. This allows you to open up a bank account, establish credit. It allows you to have your own identity and build up your own assets and your own liabilities. Now, you can go online and you can apply for EIN number. Now, there is a form you have to fill out, and you have to kind of know the information to fill out. It's not super complicated, but again, I have in the description links to resources that can help you take care of this without having the headache. If you have the resources to do so, I would say just get someone else to do it to make sure it's done correctly. But the EIN number, you want to be able to collect that and hold it and use it and secure it, just like your social security number for yourself. Okay, the next one is very vital, and a lot of people skip this step, right? And a lot of people need it because it's like a guideline, it's something to keep you in place, something that you can reference. And this is your bylaws and it's your operating agreement. Most people do their bylaws but don't understand what their bylaws are and never read the bylaws, and they do it out of formality. Well, bylaws are what actually governs your company. It's what's it tells what its process is, how decisions are made, how things are to be decided as a collective group. The more people you start to have involved in your company, the more you need your bylaws. It's going to tell you how to resolve conflict. And let me tell you, let me tell you, I had to go to my bylaws, not knowing that I needed to go to my bylaws, because I have encountered multiple issues when I ran my companies, because people are people, humans are humans, and it is what it is. But you need to have your bylaws in place that's going to actually give you how to resolve these issues, what guidelines that you're supposed to go by. And this is something that dictates everybody. So it trumps individuals' opinions and thoughts and what they think should happen. You have bylaws for a reason, and they're voted in. That's a good thing. And that's again about your percentages. Again, I'm probably just gonna go ahead and do a video about raising money, shares, how to look at things from that perspective, because that's something that keeps coming up in my head that I know that you need to know. But the bylaws are what really govern the organization. Now, operating agreement. A lot of people skip this. And that is a big mistake, okay? Because operating agreement is about the percentage of ownership. Who owns what? Who's in what position? Who gets to tell who what to do? Who got the power? Who don't have the power, right? How's voting actually done, right? So are we saying that you get two votes per share? Are we saying that you need two-thirds to override? I mean, there's so many different rules that you need to know, that you have to have in your operating agreement, that if you don't have that, oh my gosh, you're looking for something to just go wrong. And I know what you're saying. Hey, me and this guy have been buddies forever. Hey, me and my wife are starting this business together. Hey, I trust these people. Always have your stuff in black and white. And it's not just for yourself, it's for them too as well. And no one's going to ever invest in your company if these things aren't in order, period. So operating agreement and bylaws must be in place. You need to read over them. You need to make sure it's something that you agree with, and it's not just a formality, something that you're writing down. All right. So now we're going to get on to the headaches. Oh my God. What I mean by the headaches: business license and permits. Let's go ahead and jump over to that. Okay, business license and permits. Okay, one of the businesses I went into, I didn't even know that we need to be bonded. Okay. In case you don't know what bonded means, it means to be insured against any error, against anything that can go wrong when you're doing a transaction. And we had to be bonded. And in order to be bonded, you had to find a institution to secure you. And if your credit ain't right, you're not getting bonded. So I'm going to let you know right away that you need to research the business that you're going into and make sure your credit's right just for the sake of being able to get bonded. But there's also some licensing that you might need to obtain, that you might need to make sure your credit's is straight, right? But also, what type of licensings do you need? You know, if you're in real estate, you have to go get a real estate license, right? You actually have to go take a course for almost a month or so. And in some states, it might be a week, but you have to take a course. You have to pass. You have to get licensed. So you need to know these things ahead of time. And not something that you do after you spend all this money structuring a company and putting the bylaws together and getting all these people excited and getting people to try to feed in to your dream, and you never did your licensing like you needed to. And in each county, each state has different laws when it comes to that. And then we don't even want to get into the permit. So you might need a permit to be able to sell something. So you need to do your research on that as well. And again, I'm going to plug it in the description. We have links to resources that can help you do this and navigate this and clean this all up for you to make sure whatever you're investing in your business is not being wasted. Because most of the time is being wasted making mistakes with filling out the wrong paperwork and not getting the right things and being held up. All right. So this is a must. This cannot be skipped. In fact, if you made it to this part of the video, then you should know that this is probably one of the first things you should research even before your name. Right? One of the first things you should research before your name. So if you made it this far, then you got the golden nugget and you know to do this. Now, hopefully I didn't scare you, but if you lacking the confidence now after what I told you about starting a business, look, I want you to look at the video right up here. This video right here is going to tell you about how to build up your confidence, but also I want you to check out this video over here too. It's going to be very resourceful for you. This is your boy JI, a random podcast. I'll see you on the other side.